Hello, guys. Good morning. My name is Prince Wonder, MD Wonder Fund. Welcome back to our midweek live analysis with Prince Wonder. Now, as usual on the program, we'll take a look at the financial markets, crypto, forex, try to see what the market has been doing and where it's likely to go from here. Now, the market has been a bit confusing of late, actually not of late, for the past couple of months, and it's made TA a little difficult to work with because the purpose or the base idea of technical analysis is looking at what the rest of the market is doing and trying to find a path, a footprint to follow based off of what other people are doing in the market. Now, when there is confusion in the market, it makes it a little difficult to be able to accurately predict what the market is likely to do. Okay, now um, over the last couple of days on our WhatsApp group, I've been saying sometimes trading isn't always absolutely necessary. You can analyze, but you don't necessarily have to trade the market because the idea trading is a business. Let me clear that out first. Trading is a business, and you only go into business if you have a very good chance of winning at the end of the day. If the odds are not in your favor, then there really isn't any point uh, doing that business, right? If the chances of you actually making it out in profit or winning at the end of the day isn't as good as or as high as or better than the risk involved for that particular business or the chances of it actually playing out in your favor, then there really isn't any need um, going into business, right? Sometimes being patient is also trading. Being patient is also trading. You don't necessarily have to trade consistently all the time. You can trade consistently when the odds are in your favor, and when they are not, you take a little break off of the market, analyze, see if you can get in sync with what the market is doing, or when the market presents a direction or a path, then you follow. Okay. Now for the forex market, let me start from there because crypto is a little crypto. Okay. All right. So for Euro USD, I was taking a look earlier, and since we broke above this key resistance that we were looking at previously, and we're back within this previous range, right? So we pulled up, hit that point, had a pullback, but based off of the RSI, it looks like we still have a little more to go. So perhaps we're looking to a further sell to this 0.9897 range. So probably another 60 pips drop from where the current market is. Then from here, we could almost certainly take a buy from there with the intention of riding the market all the way up here. Yeah, so we could have something like this, 158 pips decent if you can be patient, of course. If you can't, probably just take the reversal back to this point. This probably might be towards Friday to next week, give or take. I doubt if it's going to play out this week, unless you want to take the sell, which I wouldn't be taking, but I'd be waiting to take a buy from down here. The odds are much better that way for me. I've been talking about odds, so you should understand this is basically just how I view the market. This is how I look at the market. When the odds are in my favor, I trade. When they're not, I wait for the market to give me what I'm looking for before I go into it. Okay, so looking at this, I assume it's probably going to be the same setup on GBP USD. Yeah, so basically the same setup on GBP USD. Although for this, I really wouldn't mind taking the trade from taking a sell from here. Mm, Basically just a short-term sell back to this zone. Mm, well, the odds are decent, but yeah, we could take this. A short sell, like I said, it's probably going to be a next week thing, not this week again. So You could actually just write that down a little bit. Probably just a pullback. I'm 50-50 on this. The It's too long. It's too long. It's too long. It's too long. Sorry, give me a second. Mm. Okay. Now, one thing you need to consider or have at the back of your mind is these markets correlate, right? So a lot of the time they basically work hand in hand, and it's based off of what I'm seeing on Euro USD. It's probably a little difficult for me to assume that GBP USD is going to have a three times larger sell than I'm expecting on Euro USD. Basically, this is just a pullback to bottom out and then a bullish continuation. We certainly have the same setup here, but I'm a little squeamish as to if it's going to drop this much or not just reverse from somewhere here. And if it does reverse from there, then we don't have as good odds to take this trade as we would if we were waiting to take it back down here. So probably we should just leave GBP USD and focus on something else. Now, basically, if Euro USD, GBP USD has a kind of setup, you most likely see the same across the pairs. Now, this is GBP CHF, and we seem to have the same breakout, minor resistance retest kind of setup there, and then looking forward to a pullback, then a bullish continuation. So usually you just find the same kind of setups replicated across these pairs. So this is giving us the same, almost the same situation with GBP USD. If we break below this support, then we're likely coming back down here. And if we take a sell from the current market price, that would leave us with okay. So our ratio 9.4. Yeah, we'll certainly take this one from where the market is now and just wait it out. Yeah, maybe you could wait a little to see if the market will pull up a little. Based off of this move on the 4-hour chart, we could maybe see a slight uptrend before we start to go down fully. So just watch out for that. This is GBP-CHF. So let's check Euro JPY. By the way, guys, of course, you as usual, you can send in pairs you want me to look at, and we'll look into that as soon as we're done with this. Okay. Okay, so basically, like I said, we just have sell setups across the board. So it's entirely up to you to decide how you're going to be reacting to these markets. If you're going to sell all or just pick a couple to take your sell positions on and just leave it. Okay, so let's switch to the cryptocurrency market. BTC has given us or giving you guys something neat to play with recently. Personally, I had to just leave the whole Bitcoin crypto thing recently because it's been too confusing and too annoying. Okay, so I think the last time I shared my chart was when I shared this buy setup. I was expecting where we are right now, at least where we hit 2400, but the market reversed off of about 2200 and reversed off of this minor support here. And then we had that uptrend and pushed all the way up. Okay, so now we'll fit that resistance before we start looking for a further uptrend. You see how the market has been reacting to this over time. So if we break below where we are right now, the current resistance, then we're heading up to 21,300, give or take. So that's another extra $1,000 jump should the market break above this resistance right now. This actually certainly looks like a breakout, pullback, possibly bullish continuation. But like I said, when there's too much confusion in the market, it makes it a little difficult to trust the price action in the market. That's why I just got tired of the whole cryptocurrency market thing, because trying to relate market psychology and market price is it's unbalanced. There's no sync. It's not in sync. There's no sequence. It's just random. We could hit this resistance and basically just have that sell, and then that invalidates this breakout, retest, bullish continuation trend that we've been. And it's been happening a lot lately, where the market is basically acting out of character, and it makes it a little difficult to predict what price will do. So I've basically switched to a react um, react mode rather than act and wait for the market to move. So instead of waiting to just buy and then wait for the market to move, like I was pointing out with the forex market, instead I wait for a breakout and then trade the breakout or enter the market on the breakout. Now, the only side effect for that is it gives you a much larger loss. It increases the amount of loss that you would incur if this market does not go your way, but it's actually better that way. It's worth the risk. It's much better. You have a better chance of the market playing out than not, right? Because if we take this trade from where it is right now to take a buy, we try to take a buy from the current market price, hoping for a bullish continuation. Our stop loss is going to be below $20,000, and up here 20, 21, 100, 21, 200, give or take. Now you see our loss basically is about 2%. This situation just actually gives us better RR. So our loss here is about half of what we stand to gain. But if we do wait and buy the breakout, our stop loss is going to be pretty much where the market is right now. You see we have okay, on this one we have basically smaller odds, but usually there's actually a much larger loss when you're taking where the market is compared to buying the breakout, and there's a certainty angle attached to it as well. So there's a much better odd chance of playing out when the market has already broken out, and then you're just trading a continuation of an already established trend rather than gambling and then waiting to see if the market actually follows that out. So based on the frequency at which the market does contrary to what we analyze, that's why I'm bringing up buying the breakouts rather than just chipping in at the support and then waiting for the market to move. Usually I'm more of a buyer support and wait, but with what the market is doing, I think buying the breakout is a more reasonable option. Okay, so gold. Let me look into gold before we continue our cryptocurrency analysis. Okay, so basically, it looks like gold has the same sequence or the same setup with the rest of the market. Give me a second, let me check DXY. Okay, so DXY actually looks like it's buying, so it's understandable as to why these other pairs are on a selling spree, right? Okay, so literally this looks like we've hit a key support for DXY, and the market is reacting to that, trying to go up. And so, yeah, every other thing paired against the dollar is almost certainly to sell if this is going to rise. So, yeah, you might want to look for a good price to enter gold on. Personally, I don't trade gold. I don't like gold. Uh, I had a bad experience with gold, so it just makes me squeamish. So anything I'm not going to trade, anything I don't feel good trading, I don't trade. I think I said it in the group yesterday. Any trade I'm going to take that's going to make me lose sleep, I'm not trading it. You see, you need to find your comfort zone, a pair or any trade that's not going to allow you to have your peace of mind afterwards. You shouldn't take it. It means you're not absolutely sure of what you're doing. You don't accept the risk attached with what you're doing, and as such, you're restless. Because before I take a trade, I know how much I could lose to this particular trade, and I've accepted that loss already. Before I enter the trade, I already lost dash 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 amount that's attached. That's the potential risk of that trade. So whether it comes out in profit or not really doesn't make much of a difference, since to me I already lost that amount. So I just allowed the market to move. Okay, so our ICP analysis from last week played out, and now we're still trading within the same range. If you actually had my setup on your chart, you would have flipped this at least once or twice more after the initial analysis. Ranging markets are good when the market sticks to a particular range, and it's annoying when the market continues to change patterns and over and over again within the same consolidation area. Makes it a little difficult or harder to trade the market. Hmm. Can't actually see a decision here. So instead of waiting, I'll just wait for a sell if that happens, and then take a buy from here. Basically the same RR with this other trade 1.69. It's basically a flip of this. So we just wait to see if we have a reversal tendency when the market reverses, or if the market reverses to this zone. Okay, so Solana looks to have broken out of a key resistance here. I'm indecisive. I can't place my finger on if I should be bullish continuation, or if there's likely going to be a retest here before we continue going up. Because as we see, we had a strong breakout, right? Now, after breaking out, we see a lot of indecisiveness. This market has basically not given us any reason to expect a bullish continuation or a bearish continuation. There's been a deadlock. This is a 4-hour chart. So for the last almost 20 hours or 12, 13 hours, give or take, the market has been stuck within 34.36 and 33.86. So it's a deadlock. We really just want to wait and see and trade the breakout of this. If it comes down, good for us. We have a better entry. If it doesn't, we can trade the breakout take the bullish continuation as such. So if it comes down, we re-enter at 33.5, give or take. If it breaks out, we can simply just stop up and then just trade that extra $1 increase in price for Solana. So that's a give or take 3% move if we buy the breakout, and if we buy at the support, 6% give or take. So whichever comes to pass, we just trade it. Now, I want to clarify an assumption with technical analysis. You're not looking for certainty in the market. You're looking for possibilities, chances, likelihood. How likely is this to happen? What are the different possible outcomes that could play out on this chart? You identify. If you cannot pinpoint which is more likely to happen, you have a set of scenarios, and then you have points that confirm, or scenarios or situations that confirm each individual outcome, right? And then you simply wait for that to happen, and then you trade the continuation. That the market giving you confirmation of a particular trend before you enter it. Okay. All right. So I'm just going to look at one more pair for today. So AVAX. Yeah, AVAX. It's been one of my few most traded pairs recently. So this analysis was invalidated. I think this was from last 2 weeks. So okay, so virtually the same setup we have on Solana USDT. Breakout consolidation. No decisive direction for price yet. So buying the breakout of this price area. Should the market break out of it, we take a bullish continuation after the market breaks out of this. And if it comes down, we have a much better entry to enter. Now, one thing you need to understand with, especially with crypto, the crypto market has grown so much, and crypto exchanges have added so many features that you don't actually have to be on your chart to enter to buy the market at the breakout or such. You can use OCO. Your OCO order cancel order, or one cancel the other, basically just gives you an option to set two buy orders at the same time. You can enter after the market drops or after the market climbs above your breakout price. Okay, and if you're even using OKX, you could set a market order for these individual orders instead of limit orders like most exchanges. You could still use market order to enter the market after it either goes up or comes down once your trigger price is hit, right? So understanding the instruments and the options you have to trade basically gives you better chances and better decisions that you could take in the market. Trading isn't really all that difficult. It's all about decisions that you make and how you follow up and your reaction to those decisions that you take in the market. Okay, guys, so this is what we actually have for this. I'll be sending updates on the different analysis that we did this morning. If you have any questions, you can always drop them in the group or send them to me directly. I'll be always happy to answer you. And have a great week. See you next week.